Good morning, everyone. This is David Blair, the Crosshairs Trader, and it is Tuesday, January the 4th, 2011. The market is designed to frustrate as many participants as possible. The reason I say that is because the market does what it wants to do, when it wants to do it, and how it wants to do it. Whereas stock traders, investors, have an idea of the way they think the stock market ought to work and what it ought to do and when it ought to do it, how it ought to do it. And that can create frustration. Us traders have certain patterns that we look for, whether they're head and shoulders. We talk about reversion to the mean. We talk about moving averages. We look at support and resistance. We look at Bollinger Bands. We look at all these kinds of things. We look at multiple charts, trying to figure out exactly what the market's going to do based on our terms. However, the market's got a mind of its own. In fact, it's got millions of minds of its own, and it makes decisions based on the collective nature of all of those who are participating. And our greatest designs are easily upset and changed. Those who make money in the stock market are willing to accept that the market will do anything, that the market will change its mind, that the market will bust through patterns, that the market does not care about patterns. And that's where the professionals, those who've learned how to control their emotions and those who've learned to accept what the market is, that's where they make money, because they have learned how to get out of trades when they're not working because the pattern does not work. And they've also learned how to take advantage of the market when it is doing something that they anticipated it would do. So, trading's difficult in that it asks that you look for patterns. That's what technical analysis is. But at the same time, it asks that you accept when those patterns do not work. So it's not a matter of being right. It's a matter of making money and losing less of it when you're wrong. So let's take a look at the stock market today, and we'll talk about just a few of the things that I'm discussing. I like to look at the S&P futures and the NASDAQ futures to give me an idea, along with the other major indices, give me an idea of where there might be some levels of support, resistance, whether the market is trending, consolidating, whatnot. And right now, and I've discussed this a few times in the last few videos and on my blog, but right now the red line here is a potential resistance area. Okay, this is the S&P futures. Now, when it comes to frustration, there have been those who were sure that the market was getting ready to cascade down thousands of points back here in the summer. It frustrated them. The world was coming to an end. Economic situation was horrible. We had busted through a potential support area, and it trapped a lot of traders. We got stuck into a range. We came back down to the bottom of the range again. Looked like it might be heading down. Again, held, frustrated a lot of traders, and then the market did what many thought was the unthinkable. Pretty much went up for 4 months in a row. Worst time of the year, usually September, October. Market did what? Did nothing but go up. Frustrated a lot of traders. Frustrated the ones who missed the move. Frustrated the ones who thought there had to be a huge reversal. And then we had a huge move up in the 1st of November with some economic news, some presidential news, Fed news, and on that huge surge up, what did the market do? Then it had its correction that many were looking for in here. So again, more frustration. Well, the market held firm, broke out, and has continued higher with little rest since the beginning of December. All those who are calling for the world coming to an end, that the economy's horrible, that there's so much sovereign debt, the unemployment's horrible, da 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 da. These are the ones that are again being frustrated, who missed this, who got in here thinking that now it's time to roll over, but instead it's going up again. Well, now we're heading toward resistance again. Possible resistance. So let's see what's going to happen as those who have been frustrated either decide that this area is going to be broken, we're going to continue higher, and they jump in because they've missed this. And if that happens, will this be a bull trap in that we're now going to be sent into a reversal here? More frustration. Frustration at missing the trades. Frustration when you get in, when you're finally convinced and it rolls back over. The market is designed to frustrate all of our good intentions with our patterns. That's why we have to accept what the market's going to do. So there's two scenarios right now. We're going to break through here, and we're going to continue higher and forget all about this, and it's going to become green support line. Or we're going to reverse here and head back down when a lot of participants jump in. Two scenarios. We have to be careful here. We could even careen higher, get a lot of traders involved here saying, oh, now we've got a new support level, and then it breaks back down. You say, well, David, you're just giving us any scenario that could happen. Why don't you tell us what's going to happen? Well, first of all, I have no idea what's going to happen. Second of all, I'm always prepared for any type of scenario because the market can do what it wants to do. Let's take a look at the NASDAQ. Same thing. NASDAQ's hitting a level of possible resistance. It's pulled back a little bit better than the S&P. Nice pullback, sideways move, and now possible resistance. Again, the huge move, the pullback, huge move. Frustration, frustration, frustration. Will there now be more frustration for either the bears or the bulls? Depends on what's going to happen. Now, where do I get my resistance lines? All I'm doing is looking back at the weekly chart. Here's the NASDAQ. You can see in 07, we're right back to where we were, the highs of 07. Can you believe that? Here we are. And then we had a huge sell-off. Is that getting ready to happen again? Don't know. Don't know. We'll be prepared either way, or we could bust right through it and really frustrate a lot of the bears. We just don't know yet. Okay? And then when we look at the S&P, same thing. From July of 08 is where there was a sell-off. Haven't reached the highs yet, way up here. Next level is going to be at 1392. We're at 1267. What is the market going to do? Will it continue to frustrate the bears and those who have missed out? Or will it frustrate and go the opposite direction? Dow. Nice, easy move up in the last month or so. Had a huge move yesterday. Hit resistance almost to the penny. Again, resistance. Goes back to July of 08. What are we going to do here? Again, the scenarios. bust through this, continue to rise, bust through this, pull back, test this as support, reverse here, bust through here, test this as support, fail the test, and come back down. In any scenario, there is the opportunity for the market to frustrate as many participants as possible. That's my take on how the market frustrates. If you've got any questions, like to join me as a crosshairs trader, let me know. David at crosshairs.com. I appreciate you, appreciate your interest, and look forward to seeing you next time in the crosshairs.